And we're streaming live again. Low effort vlogging. Don't mind me, thank you. I'm gonna do something with this wall. I don't know what to do with it. I need to decorate. I'll get there eventually at some point. Okay, so today I'm gonna go over AA and then Playboy. Look around the market a little bit. Just like keeping my thoughts here organized helps me just kind of like process. And then it's fun to look back on. Starting with AA, I had some analysis here, and it was suggesting that big grind and big resistance. Okay, I gotta actually open up my chart for my screen. Okay, this is a daily chart. Big green today. We got wick here. Volume. Now, the volume indicator I use, let me run through this really quick, how I have this set up. This is a, generally this is a cure bar sell, but yeah, I don't have that set up here. This is just volume. Yeah, green and red, that just means like what the candle was. So just ignore that, really, it doesn't matter. You can't distinguish between the buy and the sell in just looking at volume overall. What I appreciate about my volume indicator is that I have the 30-period average volume running through here, so you can see if we're above the 30-period average, and that helps us understand whether or not we're making a significant move or not. Today, volume was, of course, far below there. Implied volatility is hanging out kind of high. That's this bottom thing. This is important to watch, too. Implied volatility doesn't like to get too high before it gets pulled down. Typically, we see implied volatility increase in motive trends and decrease in corrective trends, and that has to do with how price is tending to overlap and run through prior price levels in corrective trends than in motive trends, because motive trends are making progress. So implied volatility and motive waves have some correlation, and we can use that to help us understand what's going on. RSI, relative strength index, is moving around at 50. Hard to say which way this thing is going to go. We're going to go into a 1 minute time frame where I did some analysis and created some expectations, and I am already remembering. I think I put it here, and I haven't updated this. I'll need to update this again. We had some discussion about when you should enter a trade above a price level and how price poked above a couple of times but got dashed. This is the move you were looking for right here, but again, got dashed. When we push through a second time, you would think that's safe, but what you really want is to see this bottom form. It's when this high becomes broken, that's when we start to feel really safe. This is, wow, this is a funky chart. We're going to take off candles first really quickly and just start to break this down a little bit better. I decided that we had A, B on the minute degree, so this would be C down here. I'm going to take just a moment. We're going to just call this C, and I'm just going to do new text here. I know you can't see that very well, so I'm just going to put big, there we go, yeah. And then I don't know what color I'm using. Is it gray? And freak. This is going to look so weird. Okay, there is C. And there's actually a bigger wave degree here, which will be the same size text font-wise. There's A, duplicate, pull this down, edit it. A, B, and C build into other A, B, and C waves. Here, C, or B, or I should say A, A, B, C, and that was A, and then that was the top of A, and this was a B wave, 3 waves, right? A is motive, 1, 2, 3, 4, 5. B is a 3-wave motion, 1, 2, 3. It's confusing because wave B always seems to extend. Well, it feels like extension. It feels like extension. It's really just how wave B forms. It seems to take longer than I always like it to. It's very frustrating to try to follow wave B for me. At any rate, I think we saw the end of that B wave ending right towards 58.47. That would be the target. And the reason why I kept the target there and I didn't move the Fibonacci extension that derives that target is because I think this is actually part of an expanded flat. An expanded flat does a really interesting thing. It sets a new high, and then it goes down lower. Like, and that's just a bull trap. Pretty sure that's what's occurring here. when price failed to break 60.54. This would be A. This would be some crazy wacky thing. So if we're looking for down, and of course this is a C wave. This is the strength of a C wave. A C wave can do nasty stuff. That is a strong, powerful wave pulling down, and that would be wave C of B. And in our Elliott degree wave count, this C is actually smaller than the B. The B is bigger, and that's how I layer it. Typically, what's really confusing is I'll layer it away, like let's see here. Medial. Generally, the smaller waveforms are medial. So, like, if it's a downtrend and I'm labeling the bottom, the smaller waveforms are close to the price. And then if it's an uptrend, it's typically the opposite, where the smaller waveform's close to the price. So it's below. Don't get confused. Here we go. This would be wave A, and then this would have to be A, B, C. This huge choppy sideways thing is a wave B. This is why wave B sucks. Wave B is the worst. It can do whatever it wants. I hate it. And then wave C comes in really strong. And if you were really into that count and you knew exactly what you were doing, you would have identified 59.79 and then ridden that thing down. But you wouldn't have entered initially. You would have waited for this. This is exactly what I've tried to keep saying, is you need to wait for price to come back and test a level of support and resistance before just hopping in. Just don't do it. Just don't do it. Just wait, okay? Boom, price starts coming back down. You can start entering in, especially when you confirm below 59.39. All right, so we're going to simplify this a little bit. We're going to move back out. Now, what in the hell is this? Well, what we're doing is we're developing wave C now. This is in development. C. And we'll just write ... so we know it's not done. I had that confusion earlier for myself. And the target's 63.13 for C. Did we actually get there? And we've been targeting that since we passed above 61.23. This is brutal, by the way, to see this sort of wild swinging through here. I hate corrective trends. I hate it. They're the worst. Absolutely hate it. They're hard to trade. It's frustrating. And I want you to know, and I'll say it once, I'll say it again, I hate trading through wave B. And that's like what we're seeing, right? This is all a bigger B wave. At some level, this is all B. And we're trying to figure out where wave C is currently. Let's move back in. This wild ride feels like 1, 2, 3, 4, 5. A, B, C. Disgusting. And then 1, 2, 3, 4, 5. That could have been the top of wave C right there. Let's turn on our candlestick pattern, see if we touch any higher. Nope. Almost got there. Got pretty close. Can we refine our target at all? We can, because actually wave B came way down here. So we can refine our target. And it becomes 62.16. And boom, perfect. You can see we actually met expectations perfectly. Just needed to update that target, because what we're doing is we're taking the height of wave A, and we are applying the downtrend of wave B, and then doing the extensions. If this is 1, 2, 3, 1, 2, 3, that's it. We're going to be bearish from here on out, unless we get another high above 62.67. And if we do, then we're looking for 64.59. There's another 2 strikes in there, right, to trade against if you are feeling adventurous. I would reckon that this goes sideways a little bit, and then we start to see another downtrend come in, personally. Because this looks pretty good. Complex enough to throw most traders. This looks weird enough to not be motive, which means A, B, and C. I got 3 waves in there. Let's turn on some larger time frame charts. Oh yeah, I was drawing the cat. See the cat, the ears, those are the eyes. These are like the little mouth or nose. 63, 64. I guess on the hourly time frame, that still looks really plausible. It really does. 1, 2, 3. Why? Why are you doing that? A, this could be B, could be C. Okay, on the hourly time frame, we are solidly convinced we're going to hit 63, 64. When I zoom in and I ask myself, How can I get to 63.64 on my current analysis? The answer is simple, and it's just that we get a new high, maybe even getting above 62.16. There's a little chop through here. Okay. Let's start doing the analysis. Okay, so if this was A, B, C, I'm actually going to start this wave extension from here, and then we're going to assume that we've finished the correction. This is a nice wave, very well formed. $66 even. What's the target on the hourly again? 67.13. Little overshoot to get there? Possible. Man, are you telling me I'm going to have to consider that this is actually part of the run? 1, 2, 3, boom. This is 1, 2, 1, 2, 1, 2. Yeah, that's not a real count. Freak. Okay, so 1, 2, 3, 4, 5. Easy. A. That's B and C. Bah. If I do that, though, I get to 67. I don't like it. I don't like it. What is A, B, C? A, B, C. No, that looks weird. I maintain that this is actually the correct way to measure this, that this corrective trend ends right there, and then 66.07. And yeah, we might see some overreach into 67.13. That's pretty close. If you see it get above 62, we're going to keep climbing, and then we'll see our downtrend. The breakout here is on the time frame I was expecting. I was expecting a couple of days of sideways grind, which we definitely got. And it was some wild sideways grind, but we got it. And then we had the breakout today. Not bad. And we're bullish through the end of the week. That was what I said last Friday, and it's still looking that way, although I am wanting to see it go down because that's my expectation. I'm getting ahead of myself. Nonetheless, let's go to Playboy. That's the one. That's what I want to look at. This is what's weird to me. So, hear me out. Hear me out. I'm going to turn on candles. And it's just going to be like, okay, so we had this like little slopey, kind of a lowly bottom, and then boom! News event throws price for a spin. Today, Playboy announced their unofficial like quarterly results, which seemed rude. Like, why would you do that? And we got this bombastic run in pre-market, which was fun. It just created this really weird sort of impulse-esque looking push where price just pushed up and up, but it did so in decreasing amounts of effort. For instance, this run is longer than this run. And this is definitely corrective. It's got to be A, B, and C. I don't see much motive here. Almost hit that target perfectly, 254. And the high of that candle was 254, almost closing there perfectly. A, B, and C up. Why A, B, and C up? I hate it. So annoying. Because what I'm trying to figure out is where we're at on this larger time frame. See, this is an hourly time frame. It looks almost exactly the same as that. Like this little portion here looks almost exactly like this portion right here. Okay, they're too similar. Price comes down, bounces, starts to down again. Yeah, that's it. That's like the same chart, right? Like, am I crazy? Am I? Oh, freak! I have to delete this to do this. They're just so similar. Okay, enough of that. But the reason why this is so confusing, let's go to the daily chart. Maybe it makes more sense now. It's because I have all this overlapping price data through here. And yeah, 1, 2, 3. That's clearly A, B, and C. I mean, maybe we test that downtrend one more time. Very easily so. Not what I was hoping for. I did figure something out, though, today. And this occurred to me, and I was intrigued by this idea. I don't remember what it was at all. It had something to do with A, B, C. A, B, and then this have to be C, right? The idea was that wave C can move sideways. And so if I am looking at 1, 2, and like this is all of wave 2, is that A, B, and then C? This is wave C of wave 2. It'd be taking way too long, right? No, this is all corrective. A, B, C. Oh, it's X, Y. It's W, X, Y. W, X, 1, 2, 3. Oh, 4. Wave C can form 5 waves and move sideways. Is that what's actually happening back here? Is this A, B, 1, 2, 3, 4, 5? A, B, C, correction. 1, 2, 3, 4. Yeah, you know what? I just have to do this. That's a freaking triangle right there. That's a triangle. That's a wave C triangle. A, B, C. We're ready to start our next motive trend. We had a little reactionary trend to wave E in this triangle. Let me label that out just so it's clear. A, B, C, D, and then this would be wave E. Kind of short though, right? Maybe wave E is actually in progress. Wouldn't that be interesting? I guess it can be pretty short though. Wave B was. Wave C, wave D. Sure, call that E. And then this retracement of E, I mean, it falls right in with that lower trend line of that pattern too. And when are earnings coming out? Today's volume was pretty notable too. We can zoom in on that. Yeah, auto arrange, please. Ooh. Bloop, bloop. That's a lot of volume. That's like the beginning of a new motive trend. Let's run candles. Let's zoom in right here. This thing. This is a high wick candle. What does that mean? It means price is really, really uncertain about what it wants to do. Like I woke up and price was up 20%. And we reached like 253 today. 250, 225 is where we closed. That's a big up. This is a weird chart. But to see the price come down and touch this big old fat downtrend, which we started like years ago, and then move up is really encouraging. If we get above 271, it's like, yeah, this thing is going to rip faces as it rallies. It'll just explode. It'll just be nuts. And that's actually kind of how I felt. Yeah, this is the 1 hour chart, by the way. Did you even notice? It's like, wait, that's the same chart. I know. It's the same chart. This felt sneaky. To have price drop so far, so fast, just let me measure it precisely. So I have it set up where I hover over a thing and it tells me 33% decline off of that high. That's crazy. It's like someone pulled the price down hard. And then we got A, B, and we're looking for wave C. Is that wave C? That is beyond the 161.8% extension, if it is. I think this is what I was thinking earlier today, was wave C can move sideways. So for clarity's sake, I'm going to delete that line and just follow me here. I think that's A, and then A, B, C, and then we get a C wave right here. That's so dumb. Why does the stock have to, like, corrective trends? They're so annoying. We get them all the time, of course. We have to live through them. So There's A. So 1, 2, 3, 1, 2, 3. It's a 3, 3, 5. 1, 2, 3, 4. Maybe if I break this down into like a different time frame. I don't like to leave my standard time frames, but sometimes it's like you turn on just a different chart length and suddenly everything makes sense. This makes more sense already. See, there's the extra touch point I'm looking for. It doesn't have to be perfect. 1. So 1, 2, 3, 4, 5. Yeah. And then we can actually move this up a little bit. Yeah, perfect. 100% on the A, B, and C through here. And if we need to be more clear, make it even more muddy on my daily chart, I'll have to delete all of this. That was A, B, C, ending right there. Or of B, okay, of B, because B gets 3 waves, one of which is a C wave. But whoops, now I'm just thinking out loud in my head. I'm gonna duplicate this thing, and then wave C gets 5 waves, oftentimes, especially in a 3, 3, 5. So yeah, it's called a 3, 3, 5. It's a corrective pattern. This is what it does. Then we had a reactionary trend, correcting C. Boom. On the 15-minute time frame, that looks damn well near motive. That looks motive as get out. Just arbitrarily going to like take a number here, not worry about wave degree. So bear with me, of course. But 1, 2, 3, little tiny dip for 4, and 5. And then A, B, and C. And then what? We start our next motive trend. A, because it'd be A, B, C. We might come down a little bit more. Finish a correction. Are we really about to like explode? I really feel like it's like every little time PLBY gets mentioned right now, it's just going crazy. And we haven't even had the earnings announcement yet. But I think people see that this downtrend's been tested. We haven't gotten our confirmation high above 275 yet, but when they see that this downtrend has been tested, that price moved through it enthusiastically with impressive amounts of volume, right? That's an impressive, like, look at this. Volume before at that point appears like nothing, and then boom, massive breakout. This is effort being rewarded here with price rising. Of course, price drops through the sell-off. And then we get another nice big peak as we're pulling away from that downtrend. It really feels like there's other market participants that are trying to accumulate shares alongside with me, and it's very frustrating because I want all the shares for cheap. I did buy, what I should do is I should just get like a blank chart going. Create drawing set. Like I buy and sell out of the stock all the time. Let's go year for a day. No, let's do 4 years. Let's do this. And then let me turn on show trades. So this is how much I've been trading Playboy over the last 4 years. Oh my God. So much buying and selling. Yeah. I could run through some of this, I guess. A lot of buying and selling here. Bye. Those are like small orders. Bye. Bailing out down here. Bye. So up. And then picking up little bits of shares here and there. I haven't really looked at this in a while. A lot of buying and selling. 3,000 shares at what? 66 cents? I would love to have 3,000 shares. Like, why did I ever sell these 3,000 shares at 68 cents? Oh my God. Anyway, buy, sell. And then just like buy, sell. All over the place. And then I don't think I had like much of any stock through a lot of this. But recently, yeah, I was really happy with this move. Like, this is where I got back in this year in 2025. I was like, okay, I'm getting back into this. So I was buying it at 180, 185, 192, 185, and I bailed out at 173. I stopped out. I was like, I'm not going to just hold for losses. And then price fell from 173 to 156, and I bought back in. And then I bought one share at 149, trying to just like mark the bottom with that one buy. And you can see 750. Yeah, so this was like the remainder of the shares I had, and I bought in, got more shares. That's what I want, is to accumulate shares. And then bought one more, and then boom, up we went. And I let go of 1,000 shares at 245. I bought 683 at 225. Stopped out of most of those shares at 212. And started to reestablish my position right at 212 again. I was like, nope, that's the bottom. Don't miss the bottom. And then I loaded up 390 more, and then I loaded up 100 more. So this is my position right now. Are these buys? You can see how actively I am trading this, though. Should I have just held these 156? Yes, but the thing is I wanted the money to go buy stuff. So I did that. So I sold up here, and I took the money. I went and I bought stuff. What a fool. I should have just put it all back into the market and gotten more shares. Let's turn off show trades. And let's go look at something like SPY. And let's go ahead and turn on the candles. And let's go to the monthly, daily charts. So, yeah. This sucks. This sucks. Like, the price is definitely like, I don't know if you would say if it's topping out or not. Like, this is a stupid chart. This is a stupid chart. I'm thinking rectangles occur. They can be topping patterns. They can be continuation patterns. This is the quote stock market, S&P 500. This is, I get scared because Trump and Bondi keep talking about the stock market, the Dow, and it's so dumb because everything is the opposite that they say. And so when they say the stock market's doing so good, it's like, wait, this is wrong. Okay, you know what? Forget about it. Let's go look at GLD. I haven't looked at GLD in a long time. Wow, hitting a high at freaking 510. So this is a equity. It's a gold trust. So they have a bunch of gold in a vault, and then they write shares against that gold, and then they trade at a different value than gold because it's the number of shares versus the value of the gold. At any rate, that's another stupid chart. How's Dixie doing? Dixie be the US dollar. A lot of sideways chop. Let's go I had a lot of analysis way back there. I'm going to go look at some of that. And do I have something? Yeah, there was a lot of analysis back here I did. Yeah, dollar's down. That's fine. It's above where it was during 2020, 2017. We can actually max out this time frame real quick. Max available. Yeah, so 2007, dollar was at 70.86. And this is a relative thing, right? And this almost exclusively moves in corrective waves because it really can't make progress on the biggest time frame because it's weighted against other currencies. So its value is not really free from all constraints, let's say. I think it's time just to clear this drawing set. Can I do that? Save as new drawing set, delete drawing set. Okay, whatever. Let's at least get rid of these messy, sloppy Fibonacci extensions. Do a little cleaning up here. Yeah, okay. We're looking good now. This is what I'm talking about. You want corrective trends? Here's your corrective trends, Sorry. Was that it? No, I thought that was it. Hey, let's see here. 1, 1, 2, 3. I mean, there are like motive trends in here, obviously, but I think what's going to be most important is this uptrend. And yeah, that's broken. Yikes. Yikes. When trend's broken, I leave it solid. Otherwise, it's dashed. That's going to be ugly. Just speculate a little bit. Take a little speculation. Going to take it from the top here. Well, you know, we're already kind of at. So unless we get like a really strong C wave dropping us down to $85, quote unquote. Let's go look at TNX. TNX is the 10-year rate. Excuse me. Of course, a bond has a value and it has a rate. And so its maximum value, its maturity value is known. When you're trading the notes, what you're doing is a portion of that value is in the interest and a portion of that value is in the premium. And naturally, the amount of money to be made in interest added to the premium should equal the full mature value of the bond. It doesn't want to give me TNX. What's wrong? Is the bond market crashing? Don't make noises at me, sir. TNX, 10-year treasury note. Really? You're not going to show me? That's frustrating. Okay, well, I guess that's that. Silver, SLV, another equity, paper traded equity based on the price of a commodity, silver. This looks kind of reversally. Have we peaked out? Probably. This is a weekly chart. Let's go to daily. Let's try TNX again. I don't like that it's not bringing me the TNX. Anyway, just vlogging here, just blah, blah, blah. I'm going to call this a wrap, and I'll be back tomorrow.